Hey, what's up, everybody? This is Chef again, and we're coming at you guys with the weekly watch list again. The only difference now is that we're just going to talk purely about some earnings and some futures, right? And the only reason for that is because of the earnings that we have mixed on different sectors, and the movements are going to be wild. So we're just going to look at some futures. We're going to look at some levels, and we're going to keep it very simple, right? Always make things simple versus trying to make it so complicated. All right, so what we do have this week is we do have GDP. We have it on Thursday, okay? We have GDP on Thursday. And then we also have Tuesday, we have CPI. Wednesday, we have FOMC. So those are the things that we have. So we have GDP Thursday, Tuesday, CPI, Wednesday, FOMC. So these are three very important things to watch out for this week. And I know a lot of you guys are expecting for us to go negative in the recession numbers for the GDP. So 2 consecutive negative numbers for GDP will determine and confirm that we are in a recession. But all the data that's been coming out the past few weeks have been, believe it or not, a little more positive than negative. And so, and I'm not saying that they're super positive. I'm basically saying that the overall sentiment of it has been positive. On top of that, you're basically saying that the FOMC Fed rate hikes are actually helping. All right. So even though the numbers are still bad, all right. So in general, everything is still bad, but they're not as bad as everything or everyone put it out to be. So that's very important. Number 2, GDP, they have an expectation of 0.4%, which is slightly above green. And if that thing goes negative, then for sure we will hit that recession. Now, I don't know what the reaction is going to be. So we're just going to look at levels and kind of determine whether we go bullish or we go bearish. That's what we're going to look at. So I can't tell you guys how it's going to be because I don't know the opening and closing price. That's going to be on Wednesday, because Thursday it's going to be pre-market. So you won't have that opportunity to enter a position so you can grab that pump or dump, whichever one comes first. If you swing trade on Wednesday for Thursday, it's going to be a lotto. It's going to be a gamble because this thing can, this thing can gap up like that. This thing can, drop down like this, and it can go either way. All right. It's the reaction that we can't control that we won't be able to enter. So if you enter on Wednesday for the gamble of GDP, I would recommend grabbing a straddle, right? So if you're looking at SPY, most of you will. What you would want to do is you would want to, let's just say this was the closing price. What you would want to do is you grab the next target. So you would grab this call and this put. One of those is going to hit. Now, if it goes flat, right, then you're screwed. So you're screwed both ways because IV and theta are going to pretty much kill your contracts. But whatever you do, just make sure that it's more of a gamble and it's not something that's biased. You don't say oh, I'm grabbing only puts because I think it's going to be negative. So you go whole account on a negative earnings or lotto on this GDP. Also, don't go too crazy and say, oh, well, I think it's going to be positive and it's going to surprise the market. So I'm going to grab a call and then go way out the money and stuff and go crazy, right? So just be careful. Whatever you do, be careful. If not, just don't even get in there, right? So that's what we have. GDP on Thursday. Tuesday, we have CPI data coming out as well. Okay. I think it's CPI, yes. And then we have FOMC. So on this day, we're going to have more information about the 75 points that are going to get raised for the rate hikes, or is it just going to be that full one whole point? So we don't know. All right. 0.75 or 1 full point. We don't know. So this week, just be careful, whatever you guys do. So let's look at some weekly levels, right? First of all, what do we have here on ES? A lot of people are, let's see what people are drawing and let's see what's really here. All right. So you can look at this in a few ways. All right. So technically we are still on this nice downtrend. Okay. Nothing has really changed. So market is still on a downtrend, guys. All right. No matter what you do, no matter what you say, no matter how the data looks, no matter how many green candles, no matter how many red candles you have, no matter what kind of patterns you have inside, we are still on a downtrend since the beginning of the year, and nothing's really changed. We have those intraday changes, and we have those movements and trends that we have that we must respect and follow, right? So how did we get to that top point? Well, what do we see? Here is your resistance, okay? There was your resistance. So basically what I'm saying is that there were some buyers that stepped in based on all these wicks. And what it may potentially look like a rally-based rally. Did that play out already? The answer is yes, right? So here's your rally, here's your base, here's your rally again. So this is a rally-based rally. Let's call it that. Other people had a nice little pattern here. So this squeeze happened and it broke above already. Some people are drawing this bear flag. So a million ways you can look at it. But again, remember, like I said, I just pointed out so many reasons here for us to go bullish on this week. Did we go bullish? Yes. Okay, do we close bullish? Yes. Is the sentiment still bullish? Yes. But we do have FOMC, CPI, and the GDP. On top of that, we have some big names like Apple, BA, UPS, and Google, and Meta, I think Meta. But we have some big names that are going to go for earnings this week. So this is what we have. All right, so I'm going to delete that bear flag, and I'm going to leave it up to you guys to keep it or not. And all I'm going to do is give you guys the support and resistance that we would need based on these weekly levels, right? So I'm going to mark this level because it's very important, 39.15. And I'm going to grab this piece right here because all the buyers stepped in and they pushed it all the way inside here to this 38.67. This is the only level that I will be personally watching. As long as we're above this, I am going to continue to buy the dip in the market in general. Once we go below this specific level, then I'm going to look for put plays all across the board. All right, so let's go on the 4 hour and let's see what we're talking about, right? So you guys see, there you go. There's a rejection of that trend line, down, down, down. So price action, what is it? It's something that's happened in the past, will most likely happen in the future, which is already happening. And it looks like we're dropping down right now. But this here, what do we have here, right? So let's look at this. You have a nice little channel there. You have a nice little channel there. So we have a rally with the channel, which is kind of good still. We don't know whether we're going to open or whether we gap up or gap down. As you guys can see, my time right now is only 12:30 p.m. and it's about lunchtime. And for Eastern, I think it's about 3 o'clock. So let's look at this recent trend. This is all I really care about. So like I told you guys, as long as we're over that 39.15, I will continue to buy the dip. I want to make sure that we retest this specific level. All right. So on the 4 hour, as long as we're above here, this yellow box, so this 38.95 and that 39.15 is my dip by opportunity for me. Anywhere below this yellow box, I'm going to be cautiously bearish. Anywhere in here, I don't care where we go, because this is the weekly, the 38.68. That's the level I gave you on the weekly time frame. But this is what I'm going to use for a dip buy, and I'm going to continue to buy the dip. Now, everything is going to change throughout the week. So just remember those two levels. This is my dip buy opportunity. All right, so let's and let's do this. So below here, all I'm doing is separating that. So that's how I'm going to use it. I'm going to use this as a dip buy opportunity. As long as we're above this, I think everything is still good, and we may break that 4K. Now, we haven't seen that 4K in quite a while. So the 4K number may be something big to worry about. If we do pop over that, my next expectation for this is basically right here, that 40.30, okay, and that 40.15. We touched it on Friday, which was cool, and then we got smacked down, and basically a nice red day on Friday. But overall, we ended the week green and with the nice bullish sentiment, okay? After this 40.30, I'm going to look for this top of 40.80 and 41. So I'm using these candle bodies right here, right? Because it looks like a triple bottom, as you can see, 1, 2, 3. And then I'm going to grab that top right there. That's it. That's my target for bullish momentum. And then we have the top of this, but we won't know until we get there. So those are the major levels that you guys got to look out for, okay? Now the bottom, you're looking for 38, 37.50, 37, and 36.50. Very simple. A lot of whole numbers are involved just because it becomes psychological. And that's what we got to watch this week. A lot of psychological movements and then a lot of aggressive movements, or we may literally just go range due to the fact that we have all this data coming out, the FOMC, and then the earnings, right? So we're just going to have to be very, very careful. So let's look at NQ. NQ is kind of on the same thing. If you guys remember, this is the one that I told you guys that will probably be hitting the bottom soon on NQ, just because of this base here. And this is exactly what happened. We ended up hitting the bottom right here, and then we based out. So almost the same thing as ES. You guys can see there. And we have that nice green candle. So ultimately, like I said, guys, we are still on a nice downtrend, and nothing has really changed. So we have a nice channel on the weekly time frame since the beginning of the year. Like I said, it's everything is still on a bearish movement, but overall, there's a lot of tickers in the market right now that are trading sideways and creating so much value that popped in the past like week or two. A lot of accumulation is happening in the market, which is a great sign. Okay. Same thing for NQ. Like I said, let's draw this trend line right here. That's the trend line you want. Like I said, so all you really got to do is to just draw a trend line on top and make sure that we pop. RTY was the one that got a lot of attention this week, and it actually broke a good little base here. That's a little base that it broke, and then it just ran up to the top. So I'm looking for this top right here. See if we can even touch that this week. So I'm looking for that 1900 number for a bullish play. Otherwise, we're just gonna come back and retest. So anything that broke above bullish this week, there's a probability that we may retest from the top to the bottom. So as for gold, is sitting at a good spot right here. This is like the last line of support, and it didn't break below this week. It actually held its ground. So for gold, I've told you guys in the past, if you guys have been following these videos, gold is more as it acts as a safe asset in the market. So because we're at a good level, it's a perfect time to be looking at gold, because we are in a very volatile week, incoming week, with again the GDP, the CPI, the FOMC, and earnings. So there may be some movement into some gold here, just so we can get a couple green candles, or even consolidate, anywhere in here. But look over that 750. I have my alerts at like 750. So if we can just go above 1750, I think we can start looking for a little bullish move back into the 18. Yeah, 1750 all the way to 18. But I'm just going to keep this on the side. I'm not taking a position on it. I just want to make sure that everything is moving well, and not everybody is going into a safe asset because the market is bearish, right? I want to be able to see the movement of the market and the reaction of it, versus me trying to take a position on gold just because it's at a demand, right? I don't want to take a position on it just because of that. I want to make sure that this at least stays red if the market is green. If this thing goes green and the market is red, that's going to show me and indicate that people are buying a safe asset because they see that there's a negative GDP. So that is the main reason I'm watching gold. I want to make sure that if we have a green market, this thing stays red. If we have a red market, this thing stays green. That's the reaction that I'll be looking for, and that's when I'll enter the position. Like I said, we won't know till like Thursday or Friday, or even during the week, we won't see any type of crazy movements, right? As for gold, guys, this thing is still trending down since the last time we talked about it. If you guys don't remember, I'll show you why. Here was your doji. Here's your drop. Here's your base. And then here's your drop, and then here's your continuation. Everything is just still trending down on oil. So no matter what you guys think, again, I will remind you, follow the charts, not the bias in the market. So as long as we're below 100, it's still bearish, guys. Look for more continuation for oil. And we're going to be looking for the 80s pretty soon. So this is going to be the target for oil right here. So there's 80 and 84. That's kind of like the levels that I'm going to be looking for. So it's kind of a good sign, because even Biden had sent a tweet a while back, and he said that to start lowering the prices of oil for all the companies out there. So even though it's very expensive still, we literally just gave up all this buying right here. All that accumulation became distribution, as you can see here. So if this thing drops just below that candle body, expect more downside for oil. It can literally drop down to this 84 this week, but only with aggressive selling, of course. So yeah, just look for the break of this candle body, long above that 95 and short below that 94. It's very simple, really. So for oil, if you guys don't know what tickers to trade for this, just look at USO. USO, you can kind of just trade it. But yeah, that's it. VIX, nothing really going on. TNX, this one's probably going to be moving this week as well because of the FOMC. So just take a look at the 10-year. It looks like we have almost like found like a little support here for it. They might keep it between 27.50 and 28, but if it goes about above 30, it's going to hurt tech a little bit more. So just be aware of those levels. All right, let's go look at Apple real quick. So Apple's going to be one of them that does have earnings, and this is why like it's very important to see some of these charts, right? This is literally looking like a rising wedge, okay? If you guys see it, almost like a little rising wedge, just like way up there, and we're gonna slow down and cool off into earnings, right? The other one is Google. Google looks like it's almost like it's finding some support, but this is the opening price of the split. So I don't know what Google is going to do, guys. There was some very negative sentiment on Snap for Snap earnings, but Snap is just like a social media platform. Google is so much more than just social media. The one that you should be watching because of Snap is going to be Meta. So Meta has some earnings, and what I like about this, kind of the same thing about Tesla. If you guys remembered, I posted a Tesla play, and I took 50% on the earnings. Look at the way that it's accumulating. Okay, this is what I like about Meta, that even though it's been down this much, even though they have failed to meet numbers and still getting smashed, and I think Twitter had dropped a while back, bad sentiment for the social media platforms, and now Snap didn't beat earnings, really got smacked down. So if you ask me, if we go on the weekly time frame, Meta's a good company overall, guys, and I think a lot of people use this, and they are using some innovation for their company. You know, they're growing. Snap is not a company that's really moving forward and innovating, creating more revenue. Meta is actually doing that, which is a good thing. Even though we're down all the way, and we're actually at some weekly levels down here. If this thing drops, I mean, we could probably see 140 or even these like 120 levels, right? So based on this right here. But overall, I think Meta is actually a good buy. Now, I'm not telling you guys to play earnings, right? But it definitely looks like a great spot to accumulate shares. And if you believe in the company, of course, not saying go ahead and start loading the boat because the thing is going to be back at 320 or 380, you know. But definitely at a good price point, and the fact that it's accumulating at these levels, it's a very, very good sign. So all the accumulation will determine which direction we're going to go. And to me, it just looks like a lot of buying. And we ended up breaking last week, and then we dropped down here with that news, with that sentiment. So we might sell off into earnings. So I think that's why there might be a little more red this week than there is green. The biggest thing that may affect the market is the GDP on Thursday and the FOMC on Wednesday. So again, whatever you guys do this week, make sure you guys use those pre-market levels to break above, break below. Use the target for yesterday's high, yesterday's low, and keep it very simple, guys. All right, don't go too crazy, right? So that's it. But some of the tickers I will be watching is JPM. JPM is one of the biggest ones that I am waiting for a actual breakout. This one I actually ended up getting here on Monday. No, Tuesday. Wednesday didn't go in my favor, and I got in again, and then I ended up selling one here, and then I ended up selling my position here on Friday. Unfortunately, it did not break out, so my profits weren't that big because the previous trading session I actually got stopped out on my day trade. I actually got stopped out here. So I went long here once it started breaking. And then as soon as it ended up breaking, it just literally smacked down. And as you can see, the put alerts never went off, but it ended up running back here. So I made a little more money here, but not as much as my loss. But either way, showing you guys the way that things are accumulating right now. There was a lot of tickers that accumulated: PayPal, Disney, ARK, Tesla, and some of these already broke out. And out of all the financials, JPM is the one that has not broken out just yet. So if we can get a clear break over this 116, I think JPM will run at least all the way to that 118, right? And I'm going to use this level up here and 117.50 and 118. We can probably hit that that top. And if we do break that top, it's probably going to reach on and probably trend on higher. Let me show you why. Okay, so we're going to look at a few banks, and I'm going to show you the accumulation and then the breakouts, and this one has not. So look at this. Here's your breakout on BAC. This one was a big one too. There's your breakout on C. And again, all this has to do with earnings, guys. These are your banks. And my biggest question is, why has JPM not broken out yet, right? Even WFC, like Wells Fargo, it's like, who trades this thing? So yeah, just making it clear, guys, like look at all these banks who are way ahead and JPM is still a little bit behind. So what it's doing right now, it's still building value, it's still creating that accumulation phase, and your accumulation phase is legit right here. So this thing clears 118 later. I am definitely going to take a bigger position on JPM, but I want to start taking it this week, and I want to make sure that I follow JPM on a consistent basis every single day. I check it like every hour. I don't care if I'm addicted to this position or to this ticker, but I am definitely going to be watching for a clear breakout on this because of the accumulation phase. You can definitely draw this little trend line here. Just make sure it keeps tight. So Monday, Tuesday, Wednesday, it can go sideways. And like I said, Thursday, it might just freaking crack up or crack down, or it might just happen Monday. Who knows? But your support level as low as 110. I would just say 111, honestly. Yeah, you want to use 111 or just 110.77 area. So this would be your demand where you would want to buy the dip, if anything, right? Lowest it can go. I wouldn't buy anywhere down here. I'll wait for this base just because of the accumulation and then the distribution right on top. So be aware of JPM, right? Another ticket I want to watch out for is BAL Airlines. This one here is on a retest today, well, Friday. So it's a drop base drop. And if this thing could just hold right here, I think this is going to be a great opportunity to just start trending back on up to test that 33. So it's going to be a smaller ticker position size for a swing. It's not that expensive. The contracts are very cheap. So consider looking at. Otherwise, I'm going to wait for this 30 level right here. And this is where I'm going to try to buy the dip sometime this week right here and right here. So these are my two dip buys, that 30 level and then that 29, right below that 29. Otherwise, I'm trading long for DAO. ARK, same thing. It's accumulating a lot. Look at the accumulation on this thing. It's so big. So I'm waiting for a lot of these retests, and that's what's kind of going on in the whole market in general. So lots going on, guys. Tesla, this one, I think just wait for a good dip buy. Otherwise, trade it above the 830 or 828. Yeah, over this candle body right here, 827. That's where you want to go long. Is that 828? 828. Yeah, 828 and 830. That's where you want to go long. You want to see if this will hold. So that 808 is going to be your minor support. And I'm going based off what we have here just because of this huge accumulation, and we broke above it. And Tesla just said, you know, shoot to the moon, basically. So looking for a nice sideways action before we continue back on up. My target for Tesla, first target, it's actually right here, this 860, okay? 860, 180. And psychologically, you're looking for that 850, okay? Those are my two levels. This is the zone that I'm going to look for Tesla this week, that 850. And then from there, you're just going to think 900, guys. Like Tesla moves in big numbers. So it's either you have a big account or you're about to get a bigger account if you take some of these trades. So eyes on Tesla to hold sentiment. Watch out for Google and Apple earnings. JPM, watch out for the accumulation phase breakouts. And in general, just be careful whatever you guys do this week, guys. All right. Other than that, there's not a lot much more to talk about. Other than I will follow up this week with you guys on Wednesday to see what the FOMC. If not, I will follow up on Friday or Thursday afternoon and maybe go live with everybody so we can check out the GDP, right? So you guys enjoy the rest of your week. Have fun. Don't back old positions. Do not get biased no matter what the world is saying. Even if everybody's saying it's going negative, some people are saying go positive. Who cares what people are saying, guys? Follow the charts, follow the reaction. That's all you got to do. Follow the charts, follow the reaction. No matter what number comes out, follow the reaction. That's it. All right. If you can't do that, stay the heck out. Keep it simple and protect your capital. All right. You guys stay green, and I'll see you on the next one.